Hello everyone, hello subscribers. This is Coach Ellis from Accounting CCPH, and last video Coach Mark has discussed to us one of the types of transactions, which is the use of assets. Now for this video, we will be learning about another type of transaction, which is the source of assets. So stay tuned as we are going to discuss what are the transactions that involves the source of assets. There are actually four types of transactions that we have, and Coach Mark has discussed to you in our previous video one of the type of transaction, that is the use of assets. Now, before we proceed with the next type of transaction, let us first have a quick review of what use of asset is. So again, it is a type of transaction wherein an asset account decreases and a corresponding claims, which is either a liability or an owner's equity account, decreases. Like for example, if you settled your liability or you paid a particular expense, it could be rent, salary, or any expense that is incurred in the company, or if the owner withdrew cash from the business for personal use, then those are examples of transactions that involves the use of assets. Now this time, we will be discussing another type of transaction, which is called the source of assets. Now this type of transaction is actually the opposite of the use of assets. Why? Now let us take a look at what source of asset is. A source of assets is a transaction wherein an asset account increases and a corresponding claims, which is either a liability or owner's equity account, increases. So, in the use of assets, these accounts decrease. Now this time, in source of assets, both the asset and the corresponding claims account increases. So if we are going to take a look at our accounting equation, which is the asset is equal to the liability plus the owner's equity. If an asset account increases, then a corresponding liability or an owner's equity account also increases. So what are examples of transactions that involves the source of assets? So first, purchase equipment on account. Now, if you're going to take a look at the example, first is let us identify the accounts that is affected by this transaction. So first, we have purchased equipment. So meaning, the business acquired equipment for business use. So one account involved is the equipment. The second is that by the time that the company purchased this equipment, this was made on account. So when we say on account, it means that the company set up a liability to the supplier for the purchase of this equipment. So therefore, there's also the presence of a liability account. Probably it is accounts payable. So there are already two accounts involved, the equipment and the accounts payable. Now next is we are going to check on the effect of these accounts in our accounting equation. So by the time that the company purchased an equipment, therefore there is already an increase in our asset. It's because equipment is part of non-current assets of the company. And then, as mentioned a while ago, this was purchased on account and there is a liability involved, so therefore there will be payable, which is again a liability account. So both the asset and liability increased given our example. Now let us take a look at how we are going to journalize this entry in our books of accounts. So our journal entry will be a debit of equipment and a credit of accounts payable. Now, going back to our rules of debit and credit, whenever we debit an asset account, then therefore it indicates that the asset increases. At the same time, whenever we credit a liability account, then the liability increases. So in our example, the equipment is the equipment is debited and then the accounts payable is credited. So meaning both the assets and the liability account increases. So this is one example of the source of assets. Another example is that the owner invested cash to the business. So again, let us check what are the accounts affected by this example. So first, of course, the owner invested cash. So therefore, there is the cash involved. And then since this is an investment by the owner to the business, then therefore, this is tantamount to the owner's capital. So therefore, we already have the two accounts affected, that is the cash and then the capital. Now let's take a look at how these accounts affect our accounting equation. So of course, there is the presence of cash, then our asset increases. And then, as mentioned, this is investment or capital of the owner. So this represents the owner's equity. So given this example, both the assets and the owner's equity account increase. If we are going to make a journal entry for this transaction, then we will have this one, a debit of cash and then a credit of the owner's capital account rather. So cash is debited, therefore there is an increase in our asset. And then owner's capital is credited, therefore there is also an increase in our owner's equity account. Now take note, for owner's capital, the normal balance of this account is a credit balance. So therefore, since this is credited, then it indicates an increase in our owner's equity account. Now for our last example, we have sold inventory for cash. Now this time, this involves cash sales. It involves the cash that is received by the company by the time that they made a sale to the customer and the inventory that is given to the customer by the time that it was sold to them. So those are the two accounts involved in this example. Now let's take a look at our accounting equation, which is asset is equal to liability plus owner's equity. So first is we have our cash, of course. So that is an asset account. Now by the time that the inventory was sold, then that represents the sale of the company. Now of course, sales is an income account which is part of our owner's equity. Now what happens if there is an income of the company? Then it represents also an increase in our owner's equity account. So therefore, this example or this transaction involves an increase in asset and an increase in owner's equity. If we are going to make a journal entry for this one, we are going to debit cash and then a credit of sales. So there is an increase in our asset and an increase in our income, which also involves an increase in our owner's equity. So just go back to our rules of debits and credits whenever it involves the income and expense accounts for our owner's equity. So these are some of the examples of transactions that involves the source of assets. So I hope by this time that you can also name or identify other transactions that involves the source of assets. So there you have it. So I hope you've learned something from our discussion today, and don't forget to subscribe with our page here in YouTube and follow us on Facebook at Accounting CCPH. Until the next time, bye!